There you are. You don't even have to go get your fast food anymore. They just bring the heart attack to you. Well, January is more than half gone, and like it or not, tax season isn't far away. Linda Sexton's here from Jackson Hewitt Tax Services to tell us more. Linda, thank you so much for being with us today.
Thank you for having me.
Yes, ma'am. All right, actually, the government's already accepting returns. Didn't
That's
they start
right.
doing
They started
that
yesterday. Yes.
Super.
Yes.
All right, so if you are one of those early birds,
Yes.
then you don't need to watch this. But for the vast majority of us, we need to see this. What's going on?
Well, first of all, I thought we'd talk today about the things to keep in mind when you're filing your tax return. You need to think, first of all, about life-changing events. What's happened this last year that's different than what's normally happened to you, such as if you marriage, death, birth, divorce, had a child that got married, that left home. All of these are huge impacts on your tax return. And so that's where you need to start first, on what is different. And then you need to think about then your preparer, somebody that you trust. There's a lot, and this is something especially for these people that are the people that's hurrying up and filing. A lot of them will get caught up by these fly-by-night companies, is what we call them. They're lots of times they're not ethical, and IRS, their budget has been cut, drastically, like most government budgets has. And so I think a lot of people think, well, this gives us a free ride to be able to just go out there and make up anything we want to.
Cheat like crazy.
But it's not. One of the things that was passed into law was that used to the preparers had a $100 penalty if they didn't practice due diligence. Now that increased on January the 1st to $500 an occurrence. Wow. And so is that person that's making up all these things and putting on your tax return that you're responsible for, are they going to sign that return? Are they going to be there for you? Are they going to go with you to IRS? Or are you going to be stuck? People they'll get turned upside down with IRS so early on in life, and then it's a snowball. By the time they have penalties and interest, they just never get straight with IRS. And so they need to think about that, because they need to really do it the right way.
Understood. Let's talk a little bit about doing it the right way. What are the things that we need to be? You mentioned life-changing events. Is there anything that I need to be doing with my receipts, my bank statements? What should I be looking for in the mail? What should I be asking people to send me? Right.
Okay. Well, of course, your income statements, your W-2s, your 1099s, if you are contract labor, 1099 INT, DIV for interest and dividends. If you draw a pension, your 1099Rs. And so all of that you need to, I've brought the envelopes before, the tax saving envelopes, that you can, just have a place that you keep up with that. They can come by any office and pick up one free. And then just start, organizing it. That's one thing. And then start getting all your income together. And then your deductions. Don't overlook your deductions. Start getting them together. Go call the drugstore and get a printout of all the prescriptions that you bought. Call the doctor's office, get a printout of that. Your medical insurance, your cancer insurance, your contact lens insurance. If you wear contact lens, a lot of people don't realize that you can deduct contact lens solution.
Wow.
If you wear hearing aids, a lot of people don't realize you can take the batteries for your hearing aids. So there's lots of things that you can do that people don't realize. If you have cancer and you had to buy a wig, that would be a medical expense, and a lot of people don't realize that. Your mileage to and from the doctors and to and from the drugstore. So your property taxes, the interest on your home, that usually comes on a Form 1098. Don't forget, if you refinanced for the year, that you've got to get from 2 companies. A lot of times people forget that. And then also work-related expenses. And also with Alabama, we have a tax law totally different from federal. And a lot of people don't realize that they could probably itemize on their state even though they don't on their federal. And they throw a lot of money, the tax dollars away. And also one mistake we see in Alabama especially is there's taxes that's deductible on the state that's not on the federal. But also Alabama, for the most part, is very kind to their retirees. And so a lot of retirees are not required to pay taxes on their pensions, but a lot of them are because they don't know it.
All right, super. Linda, I'm sorry we're out of time, but you'll be back soon. We'll
Yes.
clear a lot of this stuff up.
Okay.
Fortunately, we've got time. All right. Well, if you've got tax questions, just call 205-339-1895 or learn more online at jacksonhewitt.com.